One big thing that's helped me a lot, and not just with trading, with a lot of things in life, have always been who's done this and who's done it well, and who can I learn from? That's always the best thing. Is in trading, markets are probably the quickest place to be humbled, because you have to learn to be wrong. Because I'd say on average, I'm wrong at least 50% of the time, if not more. So you really have to learn to what being wrong means. So putting that back into risk management, for me, cutting my losses short. First and foremost, I need to stay in the game. I want to be there tomorrow for my clients. I want to be able to trade more with me, and I don't have the same capital to be there the next day. So if you look at people like Warren Buffett, if you look at the Renaissance guys who run all those algos that are in their black box, different investment styles, like I said, but that doesn't mean they don't have similar risk management. Anyone at Renaissance knows where they get in and out of a trade. They just do millions of trades a day. And Warren Buffett, he buys a company, he's a value investor, but he knows when he pulls the trigger, and then he has an idea when it's working and when it's not, he gets out. So he has risk management applied to his theory. And that brings to the second point, is consistency. When you're coming out and putting these things on, you do the same thing over and over. Good trading is actually quite boring, which you'd realize is a good thing. I don't want my emotional roller coaster going all the time. I want to have my process, my investment plan in place, laid out, so I can stick to it. So when the event happens, I'm either adding to it, or I'm lightening up, or whichever applies to your thing. But doing the same thing over and over repeatedly is what gets you there in the long run. Patience, exactly the same thing. That's very similar to the sitting out power that I alluded to. Like, if I don't see a trade, not doing a trade is probably the best trade. Like, take for instance the bear market. If I'm a momentum trader, unless I've decided to take the short side, which I find is infinitely more difficult than the long side, I don't trade. There's nothing wrong with not doing a trade and not being at risk. I mean, you got a GIC now for 5%. Love the GIC. We haven't seen that forever. But my point is, you don't always have to be in the market if it doesn't fit your discipline. And that is the other part of the discipline and patience almost go hand in hand, where you have to have a plan going in. So I never like to be at the screens without a plan. I like to, while the markets are closed and you can think clearly, you come up with your plan, what trades you like, what stocks you want to monitor, so you know at that point in time when the markets are open and the price level gets hit, I know what I'm going to do. Is it go against me? Then I know where I'm going to get out. If it goes up 10%, I'm probably going to sell half and let the other half ride. So when the market's open during trading hours, I shouldn't have any surprises, because pre-market in my head, I've gone through all scenarios that can happen. If IT goes down, what's my backup? If the markets freeze, am I exposed? Do I have another executing discipline? So every single scenario you want to have in your head when you're a short-term trader to make sure you can, again, manage your risk. And they always keep learning. That's one of the biggest things I love about this job, is my background as a bean counter was very risk adverse, where, you know, there's a lot of repetitious stuff as you can manage from auditing. But as you get into this, like, you're always learning from the markets. It's a huge psychological lesson. I'm buying this. Well, then why did someone just sell it to me if it's such a great idea? There's so many facets that pull in the market, so many people involved in it, so many companies, so many good traders out there that we can learn from. And the ascension of social media, well, maybe not Twitter anymore, but a lot of the other areas we can use now, where we have so much information available that we can learn. Point 6 here is one that I find is what helped me the most, where if you look at any other facet, when someone does something wrong in a job, you would kind of sit back and self-evaluate, but very few people I've seen over the years really record and review their trades. And what helped me with that is, if I'm sticking to a discipline of momentum, if I go back and review my trades, and I literally print off a chart my entry point, chart my exit point. How can I optimize that? What did I do right? What did I do wrong? Did I obey my criteria for getting into a trade? Did I not? So what worked, what didn't? What can I improve? And that's also too, if I go back and look, there's William J. O'Neill. I'm a huge fan of him. Why? Because he prints out tons of charts. And history does repeat itself in trading. And keep it simple with price and volume. Price and volume are the two basic fundamentals of trading. You don't need anything else because all other technical indicators are usually derivatives of that. Anyone who trades in the market has to leave a footprint. So the black boxes through Citadel, Warren Buffett accumulating Oxy, whatever he's doing, those footprints are there. So if I'm going to make a trade, I want to look at those footprints that all the big quote unquote institutions and whales are moving, because me as a little guy, we have an advantage. If someone like Buffett needs to go in and out of a trade, it takes him weeks, maybe even months to move a position in some cases. Where me as a little guy, I can be more nimble. I'm just trying to find a momentum trade where I can ride that wave of the money flow going in and out. And where's that information located? Right in front of me on the price and volume chart. And the last part is physical, mental, and life balance. I am a, how should you say, excitable person. So I can find where I get too much into things and I'm swimming into things. I don't pull back enough. When I come home, my level of downtime is a little bit different than my wife and 3 kids. So I've got to realize I've got to balance myself, take a chill and just relax a little bit, both mentally and physically, because I've found with trading, given the state of information in the markets, it becomes all encompassing. So I found finding that balance, whatever that is very helpful, because again, when you're trading, the more emotions you can have out of trading, the better trader you will be.